5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to this episode of the Follow the Money podcast. I'm Jerry Robinson. Thanks for joining me. Today's episode is number 502, entitled Empire in Decline. And I think you know who I'm talking about. It's going to be a little more serious than usual today. We're going to zoom out and talk about some of the bigger forces that are shaping the U.S. economy right now and the global economy. Debt and power, and of course, the U.S. dollar and the way that empires rise and fall. And so in the first segment today, I'm going to walk through why the signs of America's decline are becoming harder to ignore in 2026 and why that matters for investors and everyday people alike. And then in segment 2, we'll bring it back to the markets. I'll share my latest insights on U.S. stocks, gold, silver, Bitcoin, the dollar, and I'll also share a few practical ways that I like to navigate downturns, especially when we see things like we're seeing this week. The market's been a little jittery. We'll talk about some ways to make money in a downturn if that's what's about to come. We've obviously been in a nice uptrend in U.S. stocks for some time, but pullbacks happen along the way, and you can profit from them. And we'll talk about that in segment 2. And then we'll wrap it all up with a final word and our concluding thoughts in segment 3 to put it all into perspective. With all that said, let's get started. All right, friends, so let's talk about something that I've been warning about for a very long time. Right here on this broadcast, on our website, followthemoney.com, to our members all around the world, we've been talking about the decline of the American empire for years. In fact, I wrote my book, Bankruptcy of Our Nation, focused upon the fact that America was clearly an empire in decline. And the case I made there was simple. No empire lasts forever. We've seen this all throughout time. We've seen empires rise and we see them fall. And when they collapse, it's usually because their systems stop working, because they begin to replace discipline with mountains of debt, right? And often because power begins to concentrate very heavily at the federal level, in the case of the United States, and the institutions begin to decay. And when we look at America in 2026, that decay is obvious. For many people who have been looking at this topic for some time, it's been kind of theoretical. They've thought, well, maybe that could happen. Maybe the U.S. could lose its crown at some point in the future. But again, this year, what we've been seeing in recent months, it's obvious. I mean, it's literally obvious that the United States empire is waning. It's declining. Let's begin with some of the hard math. I mean, the United States is now sitting on a massive $38.6 trillion national debt. That's absolutely insane. In fact, whenever I first started talking about this topic back in 2006, 2007, the national debt was a mere $7 or $8 trillion, right? So we've seen it, quadruple or quintuple or whatever you want to say over just that time. Just over the last 20 years, we've seen that, right? Interest costs alone for the United States government are over $1 trillion per year. That's more than our entire defense budget, which explains probably why President Trump is now calling for a 50% increase in the Pentagon's budget, which is absurd considering that this is an institution that can't even pass a basic audit. It hasn't been able to pass an audit for years. And you want to find wasteful spending, you just go look at the Pentagon and you'll find massive overspending on all kinds of things. But it's a kind of a sacred cow here in the United States. You're not allowed to ask those kinds of questions. You can't look at the Pentagon and say that's something that needs to be looked at. Instead, basically, you have to just put up with the fact that they can't pass an audit and also accept the idea that they should get a 50% increase in their budget. So now President Trump calling for a $1.5 trillion budget for the Defense Department. That's simply astonishing, considering that our military is already larger than many of the next largest militaries combined. I mean, it's just simply incredible. Got interest payments alone, as like I mentioned, over $1 trillion per year. We're roughly adding about $1 trillion to the national debt every 2 or 3 months, right? That's not my opinion. That is actual arithmetic from the United States government itself. What about the household level? Well, Americans are drowning in consumer debt, right? Credit card balances are at record highs. Delinquencies are really beginning to rise over the last few months when it comes to auto loans and when it comes to student loan debt and when it comes to even foreclosures. We're beginning to see those begin to rise. Savings have been thinning out in this era of elevated inflationary pressures due to the gargantuan spending that occurred back in 2020 and 2021 in the wake of the pandemic. So we have built here in the United States an economy built on leverage. It's a debt-based economy. I talked about this in my book, Bankruptcy of Our Nation. If you haven't read that book, I encourage you to get it. If you're a member here at Follow the Money, we send you a free copy, a complimentary copy when you join. You really must read this book. This book is not only covering the reasons why we are concerned about the U.S. economy, but also things that you can do to protect yourself. This is probably the most important part, right? Because obviously you can't do anything. These are things that are out of your control. You don't control the value of the dollar, from where you sit in your rocking chair as you listen to this podcast. You don't control the out of control spending in the government, right? You have a vote, but that's all you've got. So you can't control any of it, right? And this system that we've built has held together for years and decades even because of one thing, and that's the U.S. dollar, right? What has been called America's exorbitant privilege has allowed us to borrow endlessly and spend freely and export inflation all around the world. This has been due to the petrodollar system, that oil is priced in dollars and trade is settled in dollars, and so the debt is absorbed by foreign buyers. And now, after living on the kindness of strangers for the last many decades, that privilege is being questioned. Across the globe, countries are choosing to settle their trade outside the dollar. We're seeing that central banks are hoovering up gold at tremendous pace while reducing their dollar exposure, right? We're seeing gold reserves rising. We see the digital payment rails are bypassing the old system, which is why the Trump administration is pushing for America to be the quote-unquote crypto capital of the world. They have no choice, because if they don't dominate that, then their dollar is going to be hurt, right? It makes total sense. And on top of all of that, you just have the trust in U.S. fiscal discipline no longer being assumed, right? I mean, when you have the global reserve currency, that power rests on confidence, and that confidence in the U.S. dollar is eroding. Now, and it's been that way for many, many years, but you can feel it accelerating. You can see it accelerating in 2026. Let's turn to geopolitics, because here we're openly confronting NATO allies over Greenland. The United States is basically threatening NATO allies with force if they do not hand over Greenland, specifically Denmark, right? Think about how extraordinary that is. Greenland belongs to Denmark, which is a NATO partner. And yet the U.S. is signaling that it wants to act unilaterally in the Arctic to take Greenland, if necessary, for strategic and resource reasons. Now, obviously, if the shoe was on the other foot and Europe was like, look, we need Alaska, so we're just going to come over and take Alaska, right? We would be like, look, that's part of our territory. It's not a perfect example because Greenland is autonomous, but it is a Denmark territory. We might compare it maybe instead of Alaska, which is actually a state, we might compare it to something like Puerto Rico. It might make more sense. But regardless, you can tell from the headlines that Europe is clearly pushing back, right? Denmark is pushing back. France is pushing back. And the unity that NATO enjoys is fraying. And of course, China and Russia are watching all of this unfold with what can only be described as a quiet satisfaction, right? Licking their chops, seeing their enemies, i.e. the West, just going round and round. Now, this is how empires lose alliances and how they lose influence. Now, I'm recording this on Wednesday morning, and this morning, President Trump traveled to Davos, Switzerland, to give a speech before European and NATO allies, and he backtracked on the idea that America would choose to use military force to take Greenland, right? He backtracked on that, but that can hardly be comforting to European allies after being threatened with force, and then Trump saying, well, maybe he's changed his mind on that. What changed his mind? Was it the fact that a Danish pension fund said that it's exiting U.S. treasuries because of the pathetic finances of the U.S. government? Was it them basically saying, look, we're going to dump $100 million of these U.S. treasuries because the United States is an economic basket case, right? Is that part of the reason he's backtracking? Is it because NATO allies are firming up and saying, look, you want to use military force against us in order to take Greenland? Well, we're prepared to do something about that. Regardless, Trump has now changed his tune, but how in the world can that be comforting to NATO allies after the threat has already been issued by a president that flip-flops like a fish on a daily basis? And at the same time, the American empire is escalating pressure on Venezuela, a country with the largest proven oil reserves on earth, even beyond Saudi Arabia. So we've basically went into Venezuela, ousted the leader, Maduro, and have sought a regime change. Now, by the way, the Maduro regime is still in place. It's not really been changed. It's just that Maduro is not running it. We've seen, covert operations by the United States and the CIA, basically some form of economic strangulation here on Venezuela. We've seen this playbook before all throughout Central and South America by the U.S. empire and other places. So when a superpower like the United States claims the right to intervene wherever it sees fit, it basically writes a precedent. And let me tell you who's watching this closely. China. China has a neighboring country, Taiwan, who would not mind at all to go in and copy President Trump's playbook, to go in and topple the leader of Taiwan, or even simply just take it, seize it, because it's in its own national interest. This would be literally copying a page out of the U.S. playbook in 2025 and 2026. If Venezuela can be destabilized in the name of national interest for the United States, why can't Beijing do the same thing to Taiwan? This is what people don't realize, is that the United States empire is not just enforcing its own rules as it makes them up, apparently, but they're also creating a template for other nations to see what they can do without any kind of accountability. Now, let's add a final piece to all of this. We have the economic and debt-based economy, which is grinding down confidence in the U.S. dollar, right? We have the geopolitics in which the U.S. empire is creating a template for other nations like China to be able to go in and seize territories like Greenland or topple regimes and do what they've done down there in Venezuela, right? But now let's talk about the breakdown we have here in the United States. We have an institutional breakdown at home. Over the last few years, the executive branch of the federal government has accumulated extraordinary powers to the place where guys like George Washington and Thomas Jefferson would literally roll over in their grave if they saw the kind of power plays that are going on at the executive level, and the lack of any kind of oversight by the Congress, right? I mean, it's simply incredible. We have seen emergency authorities extended indefinitely, which has allowed the United States to, or actually the executive branch, to launch tariffs on any country that it pleases. These are taxes upon the American people. It's already been proven through studies. It's obvious. It's economics 101. You have presidential executive orders replacing legislation. You have agencies of the government acting like they're lawmakers, and all of this without any kind of congressional approval, right? Or literally any kind of constitutional support. And at the same time, the legislative branch has literally become paralyzed. They become completely impotent, nothing but gridlock and political theater, replacing what is supposed to be oversight. Then you turn to the judiciary branch here in the United States, which is increasingly politicized. They're selectively obeyed by our nation's leaders, and sometimes they're just simply ignored outright. This is what happens in third world countries. This is what happens in banana republics. These are unprecedented developments for a developed country, especially a superpower like the United States of America, right? We know that unchecked power corrupts, right? We know that. That's why there's checks and balances placed into the Constitution that are designed to prevent one branch of government from becoming too powerful. And we've been warned by political philosophers about this for centuries. When one branch dominates and the others are weakened, then what happens to those citizens living in that country or that nation? They'll find that their liberty is eroded and that instability will grow. That's what's happening here in the United States. Empires fall when debt becomes out of control and when the currency is weakened due to a lack of confidence and when alliances are fractured because of some sort of superiority complex, and then institutions begin to fall under the weight of it all. And we have tons of precedents throughout history, which I've written about in my book, right? Rome debased its coinage. It devastated its empire through overreach. Great Britain, the British Empire, overextended itself through military overextension and just couldn't keep up with all of its colonies, and it failed, right? The Soviet Union was an empire. It collapsed underneath centralized power, right? America is not exempt from history. And if you think what I'm saying is anti-American, well, you're wrong. What I'm saying is pro-reality, right? It's not rooted in fear. It's rooted in the need to prepare. Investors who understand the way that empires rise and empires fall, they will stop assuming that yesterday's rules will always apply tomorrow, right? Instead, they start to protect their purchasing power. They get ahead of that, knowing that's how these things end up going. They diversify. They think longer term. There is nothing new under the sun. Empires rise, empires fall. The pattern repeats. The only question is whether you're paying attention. Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, welcome back to the program, friends. You're listening to the Follow the Money podcast, one of the longest running personal finance podcasts online. We launched back in 2010. We've been serving people just like you for 16 years now. Isn't that something else? Well, let's keep moving on today. Here we are in segment 2. We're going to be moving into market insights. We're going to talk about what's been going on in the market. So obviously, all of these things we're talking about with the U.S. empire clearly in decline, kind of trying to play tough in the middle of an obvious breakdown in confidence around the world. What's the market doing? Well, as you well know, you may recall back in Venezuela, when the Venezuelan economy was being so beat up by poor economic policies there underneath Maduro, and also the sanctions that were going on affecting Venezuela. Did you know what happened to the stock market there? Many people would say, well, it'd be the worst place to be. Actually turned out to be the only place to be. Aside from, crypto and precious metals, the stock market in Venezuela, due to inflation and things like that, was just going up, 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 up. It was one of the only places to be able to keep up with the rampant inflation in Venezuela. And so many people get the wrong idea. They think, well, if this is so bad for America, well, then stocks must plummet. Actually, that's not typically what happens. Whenever you have collapsing empires, people tend to rush into risk assets, attempting to stave off the effects of inflation upon their currency. So, what I would say to you is that while we don't put all of our money in the stock market, we only, we put a third or so into stocks, make 25% to 35%, somewhere in there. As we talk about all the time with our members, how we allocate our own portfolio. You can find out more about that by becoming a member here. We just did our DCA strategy for Q1 for all of our members. We talked about where we're going to be allocating capital, right? Obviously, gold and silver has been an area we've been talking about for 15 plus years, right? How's that working out for you? Pretty good. Stocks, the same thing. They've done very well. Real estate prices have never been higher, right? So these are the areas that we've been heavily focused upon for the last 15 years, and to a lesser extent, cryptocurrencies, which have also done very well. Although they're pulled back recently, they're not keeping up with gold and silver right this second. But overall, if you look back for the last 10, 15 years with Bitcoin, it's been simply astonishing. So my point is that people who rush out of assets thinking they're going to protect themselves actually find out the hard way that that's not how you protect yourself in the middle of a declining empire. You actually have to have assets within a declining empire. Otherwise, you're never going to be able to keep up with the debauchery of your currency. That aside, that's not the point of today's segment 2 here. What I want to do is I want to get into some of these charts. But what I do want to tell you is 3 ways really quickly toward the end of this segment that you can actually profit in a market downturn. We may be upon a new market downturn. Let's take a look at the S&P 500. We'll begin there. S&P 500 pulling back, having its first decent pullback of 2026. It pulled back to its 50-day moving average, currently trading just above 6,800 on the S&P 500, just trading just really below a recent high where it was just below 7,000. We've pulled back to the 50-day moving average. That 50-day moving average is flattening out. Everything remains in an uptrend in terms of the S&P 500 right now, position uptrend, a long-term uptrend. Everything's up, but we have pulled back to that 50-day moving average, and the volume has been somewhat elevated. So that tells us that there is some fear here in the market. But the S&P 500 holding up fairly well. The key area I'd be watching right here on the S&P is about 6,500. You break down below that, you've broke down below the October and November lows. And if that's the case, then you could be prepared for more downside. So the S&P 500, I would say we're kind of watching that $6,500 level. As long as that holds, all of this pullback is just setting up to be an opportunity in our opinion. Also, if you look at the percentage of stocks in the S&P trading above their 200-day moving average, that number is around 70% right now. That's actually about 68%. That's very bullish in terms of, the overall market breadth. Then turning to the NASDAQ 100, that's more of a tech-heavy index. That has been hit a little harder than the S&P 500. It's down below its 50-day moving average, and the 50-day moving average is actually moving down. So again, when we look at the NASDAQ 100, we want to watch pretty closely. I'm looking at QQQ right now, currently trading at about 609. Really key support here for the NASDAQ 100 QQQ ETF, right around the 575 level or so. I suppose we'll hold that here unless fear really accelerates, which we could definitely see. And then turning to gold, as you well know, is just on a tear. It hit another fresh record high in today's trading session. Today, Wednesday, the 21st of January, 2026. It got up to nearly $4,900. Simply incredible rally that we continue to see playing out in physical gold. Obviously, the rally is wildly overstretched, and it's been helped by a healthy dose of fear and concern, right? So as fear and concern wanes, which when is that going to happen? Your guess is as good as mine. I don't know when we're going to see some fear come into check or concern come into check. But regardless, gold continuing to rally here, a really huge rally. It's well above its 50-day moving average, well above its 200-day moving average. If you look at a weekly chart and look at the 50 and the 200 weekly moving average, it's simply astonishing. The 200 weekly moving average on gold is right now around 24.70. Like it's literally almost half of the price. That shows you how elevated this thing is. Or even its 50-day or 50 weekly moving average, which is currently at about 3,600. Okay, so just incredible considering that gold is almost 5,000 now, right? So we've had a very big rally. I've also been talking about the gold-silver ratio recently, which recently hit 50. That turns bullish for gold at that point and a little less bullish for silver. It doesn't mean the silver has to go down. It's just that means that it's more bullish, historically speaking, for gold than it is for silver. It's been some time since we've seen that hit. And then the U.S. dollar has been trying to resume higher over the last few weeks, especially since the beginning of 2026. We started out the year at around 98 on the U.S. dollar index. We got about as high as 99.50 before we started to reverse, and that was in the wake of the Greenland issue and the confrontation between NATO allies and Denmark and the United States and all of this. What's interesting is that we didn't really see a rally on the dollar amid all of the recent concern with the dumping of U.S. assets by Denmark, a Danish pension operator over there, and then other things as well. We've been hearing lots of talk, and we're not seeing treasuries really catch a bid. In fact, we're seeing rates rise. Over the last 3 months, the 10-year treasury yield is up around 9%. It's up 5% just this year alone, just in the last 3 weeks. That's a pretty sharp move for a yield to go up 5% in a matter of 3 weeks. So it shows you that people are not rushing to treasuries here, which is typically what you would see when they're concerned. They're actually running to gold, right? That's not good for the United States. It shows that there's a lack of confidence there. I don't suspect the dollar to get above 101, the dollar index to get above 101 anytime soon. It would really take some sort of major concern that would cause that to happen. And even then, would people flock to the dollar? Would they drive it up, or would they go elsewhere? This is what we have to ask ourselves in 2026, right? Are we going to see, what are we going to see here? I'm not suggesting everything's going to fall off a cliff. Don't hear me wrong. But we are seeing some sort of investment shift around the globe, and we need to pay close attention to it. It may be a blip. It may be just a shot across the bow before something greater later, but we just need to keep our eyes, on it so that we're not caught off guard. Physical silver also still on a tear. It's pulled back a bit. Today, for example, it's down a couple of percent. It's trading at about $92.50 or so after hitting $95 just recently. Silver per ounce, $95 this week. Isn't that crazy? It's down to about $92.50 as I speak. Overall, the chart just looks like a hockey stick, right? It's just kind of going sideways and then straight up. Literally incredible rally that we've seen on silver. How long is it going to last? Well, I'll put it this way. We are beyond all of the historical metrics in terms of RSI and things like that. We are in no man's land. So I would say we're closer to the end of the rally than we are to the beginning of it, at least this cycle. Doesn't mean that we couldn't pull back, consolidate, and then move even much higher. I'm not saying we can't. In fact, I think we probably will. But I think that it would probably be more likely to see a pullback and consolidation before we continue this breathless rally straight up in terms of silver. Oil also really choppy for the last several years. It's been catching a bid since its latest lows back in mid-December, but we've seen it recently climbing higher. Some fears around Venezuela. Obviously, the geopolitical situation does bode well a bit for things like oil. So oil is picking up a bit, but I'm not a huge fan of oil as a long-term investment personally. That's just me. So I don't tend to invest in that area. There are many people who do, and I think that's great, but I just don't tend to focus on that. So I'm not particularly bullish about oil this year. I could be wrong on that. We'll see what happens. It's not one of the 9 markets that I expect to beat the S&P 500 this year. It's certainly due for a rally. I mean, energy's certainly been lagging for quite some time. Wouldn't surprise me to see it. I'm not really factoring it into my thesis for 2026. But of course, that's really dependent upon geopolitics to a large extent. Things can happen, wars can break out, etc. That could certainly drive up oil. But barring those kinds of things, just the natural supply and demand that I'm looking at right now, I just don't see that we get to a place where oil just goes on some sort of massive run in 2026. It would require something else, some other catalyst, in my opinion. When we look at Bitcoin, let's turn to crypto real quickly before we close out and talk about those 3 ways to make money in a down market. Bitcoin pulling back pretty sharply from its recent touch of about 98,000 last week before, but now we see it pulling down. It's trading right now about 88,000. So it's certainly pulled back, but it's still grinding sideways in this consolidation, still trading well off of its $80,000 low hit back in late November. So we're just kind of grinding sideways here, still trying to find some direction. The 200-day moving average is pointing down, so that is not a terribly great sign. However, it is still holding up, and so we'll continue to monitor that as well. We like Bitcoin in 2026 and expect higher prices ahead. Also, Ethereum pulling back also pretty sharply from its recent touch of around the $3,400 level. It's currently trading below 3,000 now. We continue to add Ether to our long-term portfolio in 2026. It's something we continue to dollar cost average into. We expect higher prices ahead for Ethereum. We think that's certainly something that we will see rise due to so much demand. We even saw the New York Stock Exchange just this week announce its new tokenized 24/7 platform built on blockchain, supported by things like Chainlink and other projects out there that are making this stuff happen. Okay, so we're bullish on certain cryptos in 2026. And we also think the market is going to head higher in 2026, but we are seeing a spat here of volatility. And obviously, it's kind of an induced volatility created by U.S. foreign policy. Now, let me give you, before we close out this segment, let me give you 3 specific ways that I navigate a downdraft in the markets. Right now, the markets are kind of feeling skittish. We've had a nice rally. We're well due for a nice sharp pullback. We haven't had one in some time. It would be kind of cleansing for the uptrend to be able to get rid of some of the excess before continuing higher. If that is what is going to happen, then I want to share with you just a few ways that we would handle that. Number 1, when markets start to roll over. In fact, last night I put out a trading idea to our members using an inverse ETF, the ProShares Short S&P 500 ETF, ticker symbol SH. Now that is an ETF that I've used for years to profit from market downdrafts. I've also used the ProShares Short NASDAQ 100 ETF, PSQ. Now, they also have leveraged versions of these ETFs that give you even more exposure, and it's in a single ticker. So these move opposite to the market. So SH or PSQ, these 2 ETFs on the S&P and the NASDAQ 100, they go up 1% every time the underlying market goes down 1%. So if the S&P 500 goes down 1%, SH goes up by 1%. So it's kind of a way to help you cushion your portfolio damage or even profit from the downside. But, you got to use these things with discipline, especially the ones that are leveraged. They really provide great exposure to the downside in a simple ticker, and inverse ETFs are one of my favorite ways to profit from a downdraft. Okay. The second way that you can profit in a down market, or when markets are starting to kind of curl down, is through buying put options, right? So when prices fall, put option prices rise in value, right? So I use them with, very defined risk, clear time frames. You really got to have several things in place to make these work for you. You don't just jump into put options, and make money. But what I have taught about how we use those in our options trading university here at followthemoney.com. Members have access to that. Our platinum members can go in and watch the options trading university. You can also buy it in our store online, followthemoney.com/shop. There you'll find the Options Trading University. It's got some really great strategies for those who like to use options. That's one way to make money in a down market, is to buy some put options. And then thirdly, probably one of my favorites now, is simply to dollar cost average or buy in at lower prices. So if we still have a long-term trend intact, then corrections are where you can add to your positions, right? So I like to add slowly and methodically through a DCA approach. I don't like to chase stocks. I don't try to time or catch bottoms. I let the price come to me and I scale in with patience, right? That's my goal. That's my thing. And so what we do is we continue to DCA. And if the markets go down, I don't really wish that they go down explicitly, but if they do, I'm not going to be afraid or upset. I'll just go ahead and add more, right? To me, volatility is not a flaw in the markets. It's kind of like the price you pay to participate in the markets. So volatility, you've got to expect it. You've got to have a plan for it. You got to have a strategy for it. And for us, these three strategies, using inverse ETFs, buying put options, and dollar cost averaging on pullbacks, right? To me, these are three great ways to make money in a downdraft. So there's the market message right now. Stocks are correcting. They're not correcting that much. They're certainly not broken. The uptrend's still intact. The dollar continues to be very erratic. It's slipping. Gold and silver are at screaming high levels and definitely due for a pullback on any diminishment of fear. Cryptocurrencies are underperforming and they're pretty wobbly right now, but a market structure bill would really make the difference, in my opinion, in terms of crypto prices. And that supposedly is in the works with a presidential signature, maybe in the next 30 to 60 days. So watch out for that. That can move markets there. And then, of course, oil, as I mentioned, it's turning positive. It's certainly, we've seen it turn positive, and it's holding up fairly well right now. So there's a quick market wrap. If you want more of our thoughts and insights, we have charts online. We have our weekly report we put out every single weekend. We have our ETF leaderboard, our crypto leaderboard, our Smart Score rankings, our Smart Score 11 strategy, which 11 stocks we use to beat the market every year is our goal. We have our trading software. We have our weekly webcast on Zoom. You're just missing out if you're not here. Our daily swing trading idea, as I just told you, we put out a new trading idea on SH. We put it out to all of our members last night. If you want stuff like that, you got to join. followthemoney.com/join. You can learn about all of our plans and pricing. Love to see you on the other side there. All right, when we come back, we'll close out with our concluding thoughts and a final word. Be right back. All right, friends, welcome back to the final moments of today's episode. And before we close out today, I want to leave you with a final word. It's an ancient proverb, but it feels uncomfortably modern. It's taken from Proverbs 22, verse 7, where it reads, "The rich rule over the poor, and the borrower is a slave to the lender." It's a powerful verse, friends, and that verse is really more than just some beautiful poetry or some spiritual metaphor. It really is an astute observation of how the world actually works. When individuals are buried in debt, they lose their freedom. People who have been up to their eyeballs in debt in this country can tell you the slavery that is involved with debt. Their choices are narrowed. Their future gets mortgaged to the present, and that leaves them entirely exposed and often defenseless against the uncertainty of the future. And the same is true for nations. Right now, America is a country with extreme income inequality and historic, unprecedented debt levels. A small number of people in this country control an extraordinary share of wealth, while millions live paycheck to paycheck, one emergency away from total crisis. And at the national level, the American government is borrowing not just from other countries, but from future generations who never gave their consent. When will America learn that you cannot spend your way out of a problem that was created by spending? Perhaps we should ask the same question of ourselves. When will we learn? And here's how I see it. If the borrower is indeed a slave to the lender, then financial literacy is not optional if you want to avoid debt slavery. It's simple as that. Instead, I believe that financial education represents an incredibly powerful form of freedom. Some might say that learning about money and the history of money and economics and debt and economic cycles, They might view that as somebody who is driven by greed. Not me. Instead, I see that powerful knowledge as wise financial stewardship. You don't need to fear the future, though, in order to protect yourself, your finances, and your family. But you do need clarity, because clarity is the only thing that can help you understand that while there are many things out of your control, some things are in your control. So what are you going to do about it? The truth is, reality won't go away just because we ignore it. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and I'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.